there was a lot of concern the prior day that silver would not get above 50 because the silver stocks actually were weak on Wednesday because I think traders were expecting a decline. And then when we got the huge gap up on Thursday, all those silver and gold stocks gapped way up. But then we got the sell-off from the higher level, and gold and silver stocks had one of their worst days of the year, maybe of the bull market. Silver stocks in particular, on a day that silver traded above 51 for the first time and closed above 49. It was still a strong positive close, just not above 50. You had a lot of silver stocks down, 5 to 8%. So they got clobbered. And again, that just shows you how nervous investors are and how quickly they run for the exits on any sign that, oh no, maybe there's a top, maybe there's going to be a correction. So far, nothing indicates to me that that is the case, especially considering the fact that silver recovered and closed really, I think, above $50 on the week. This is the highest daily close ever for silver. It's the highest weekly close ever for silver. I think the same for gold. This is the highest gold has ever closed a week. In fact, it's never closed above 4,000. And now it's closed a week above 4,000, not just the day. And the gold stocks were actually down a bit, most of them. The GDX was down about 2.5% on the week, although the GDXJ managed to eke out a small gain on the week. But all of this was the result of the big drop that we had on Thursday. Now, you would have thought that maybe the gold and silver stocks would have recovered some of that drop today, but I think the overall carnage in the stock market prevented that from happening. The Dow had one of its worst days of the year, down about 880 points or so, 878 points. That was almost a 2% decline on the day. The Dow down 2.5% now on the week. The S&P, though, was down 2.7% today. Russell 2000 down 3%. Big down. The NASDAQ was down about 3.5% on the day, 2.5% on the week. In fact, the NASDAQ hit a new all-time record high today on the same day that it was down 3.5%. That is an outside reversal day. The NASDAQ took out yesterday's high and then not only took out yesterday's low, but closed below yesterday's low. And in fact, it did the same thing on a weekly chart. The NASDAQ took out the high from the prior week and then closed below the low from the prior week. So that is a bad sign for the NASDAQ that a bigger decline is coming. The catalyst for this decline was Trump getting tough on China. Earlier in the day, he posted on Truth Social that he was going to impose some serious tariffs on China in addition to the tariffs we already have. I guess he was preparing to get medieval on China, but we didn't even know the extent until after the close. And probably, about a half hour or so after the U.S. stock market closed, Trump revealed that the new tariffs on China are another 100% in excess of the tariffs that are already in effect. There's now another 100% on top of that. And in addition, there's going to be export controls on what the U.S. exports to China, most likely, in computer-related stuff like NVIDIA stuff and all that we don't want the Chinese to have, those GPUs. So as a result, we got additional sell-off in the stock market after the close. But the biggest decline came in Bitcoin, which was already down. I mean, Bitcoin was down pretty big when the U.S. stock market closed. In fact, Bitcoin was down 5% on the week. Now, in contrast to gold being up 3% and silver being up 4.4% on the week. So again, this should put another nail in the theory that Bitcoin is digital gold. I mean, it's not even digital silver. It's got nothing to do with a precious metal. Bitcoin did not rally today. Gold and silver went up. Bitcoin went down. It went down just like the NASDAQ, only it went down more than the NASDAQ. So it is a risk asset. It is not a safe haven asset. It has got nothing to do with gold. But now Bitcoin is selling off even more. As I am recording this update, Bitcoin is around 113,000. Just before I started recording, Bitcoin was below 110,000. It was about 109,000 and change. When Bitcoin was down at 110,000, it was down 26% since it peaked in terms of gold in August. And based on where it is right now, it's maybe off not quite 25%. But Bitcoin is decidedly in a bear market priced in gold. And so I think that we have a lot more downside coming in Bitcoin and the NASDAQ. I mean, I don't know how far the NASDAQ's going to fall, if it's just going to be a correction or if it's going to be a bear market. We'll see. Clearly, there's been a lot of enthusiasm for tech stocks and the valuations are at nosebleed territory. So anything could justify this. But of course, we know from the past with Taco, Trump, maybe he'll come out on Monday morning or Sunday night. If it looks like the stock market is really selling off, maybe he'll come out and say something that will reverse that decline. I mean, who knows? I'm sure whatever he does, his friends are going to have the inside information. In fact, I'm sure some of his friends knew exactly what he was going to, the news he was going to release today before he did it. And so they probably had an opportunity.
There was a lot of chatter earlier this week that silver wouldn't make it past $50. People were practically lining up to call the top. And sure enough, Wednesday's trading had everyone biting their nails. Silver stocks were weak, traders were bracing for a drop, and the sentiment felt like deja vu from every other false start we've seen in this metal. Then Thursday morning hit, and boom, the market gapped higher so violently that half of Wall Street spilled its coffee. Silver didn't just nudge above 50, it launched above it, hitting 51 intraday before pulling back to close around 49 and change. Still, that was the highest daily close ever. Now you'd think that would light a fire under silver stocks. You'd expect miners to soar, but no, they got clobbered. 5, 6, 8% declines across the board. Gold stocks didn't fare much better. It was one of the strangest divergences I've seen in years. A record metal price and mining equities that looked like they'd been mugged. And that right there tells you how jumpy this market still is. Everyone's terrified of being the last one holding the bag, so the moment we see a pullback, traders hit the eject button. But let's take a breath here, because when you zoom out, this week wasn't bearish, it was historic. Silver closed above 50 on the week, the highest weekly close in history. Gold did the same, closing the week above 4,000 for the first time ever. Let that sink in. For the first time in modern history, both metals ended a week at record levels. Now, yes, Thursday's sell-off in the miners was ugly, but that kind of action isn't unusual in the early stages of a parabolic move. The big traders, the algorithms, the funds, they see technical overbought signals and take profits, while long-term investors just sit tight. It's the same pattern we saw in 2011 and before that in 1979. These moments of panic are what clear the decks before the next leg higher. I know some people are wondering, why didn't the stocks bounce back on Friday? Simple. The broader market imploded. The Dow dropped 880 points, almost 2%. The S&P fell nearly 3%. The NASDAQ cratered by 3.5% and still managed to set a record high earlier that same day. That's what traders call an outside reversal. When an index hits a new high intraday, then crashes below the previous day's low and closes there. On a weekly chart, it's even uglier. That kind of move often signals the end of a rally. So while metals held strong, tech stocks got smoked. The catalyst? Donald Trump decided to take a blowtorch to China again. Early in the day, he posted on Truth Social about serious tariffs, and markets took the hint. By the time the closing bell rang, he'd officially announced new tariffs, a full 100% increase on top of the existing ones, plus export restrictions on high-end chips, GPUs, and computer components. In other words, he's gearing up for Trade War 2.0, and investors know what that means. More inflation pressure, more supply chain tension, more uncertainty. The same conditions that sent gold rocketing back in 2018 and 2019 are re-emerging. Only this time, the debt, the deficits, and the geopolitical fragmentation are all worse. So yes, stocks tanked. But what outperformed? Gold and silver. Gold was up 3% on the week, silver 4.4%. The dollar index actually finished the week slightly positive, which makes this even more impressive. We've got a scenario now where gold and silver are rising in spite of a rising dollar. That doesn't happen in normal conditions. That's what you see when the market's losing faith in the entire system. When investors don't just want to hedge against the euro or the yen, they want to hedge against everything. And let's talk about Bitcoin, because I can already hear the crypto crowd fuming. Bitcoin was down 5% on the week. Again. On the same week gold and silver hit all-time highs, Bitcoin dropped like a tech stock. So I'll say it again. Bitcoin is not digital gold. It's not even digital silver. It's a risk asset, plain and simple. It trades like a leveraged NASDAQ ETF. It rallies when liquidity's loose and crashes when reality sets in. If it were truly digital gold, it would be rising right now alongside the metals. Instead, it's selling off just like Tesla and Nvidia. Right now, as I'm speaking, Bitcoin's trading around $113,000. That's down roughly 25% from its August peak when priced in gold. Earlier today, it even dipped below $110,000, a full 26% decline in gold terms. That's a bear market, folks. Not a correction, a bear market.
The media has finally been talking about gold. And the frustrating part about it is they have no idea why it's going up. And the funny part is how they try to attribute it to everything other than the actual problem, because they don't want to have to admit that gold at 4,000 is not a good sign, right? Because they want to pretend that everything is great, especially the Republicans, especially if you watch Fox or, watch Larry Kudlow's show, right? Because they think the economy is booming, nothing could be better, giving it all credit to Donald Trump, right? So there's nothing to worry about. Inflation is gone. We have the hottest economy in the world. The U.S. is the strongest economy in the world. But gold at 4,000. It's right. If all these good things are happening, why is gold flashing this warning sign? And so they're trying to dismiss what's happening by saying, well, it's not really a warning. I thought one of the funniest explanations that the Kudlow crew came up with was that it was Europeans that are buying because they're worried about their economies. They're worried about inflation. So they're the ones that are hedging, right? But of course, gold is going up in dollars too. It's not just going up in euros. We have an inflation problem. They just don't want to admit that. The United States has a credibility problem. The world no longer has confidence in our ability to pay our debts without it creating massive inflation. And Trump is one of the reasons that the world is losing confidence in us, because he signed on to the big, beautiful bill, which took the Biden deficits and made them worse. And he's the one that is beating the Fed up about cutting interest rates, slashing interest rates, firing FOMC members, sticking his own people in there, taking over the Fed. This is challenging the idea that the Fed is independent. And this is scaring our creditors. And, the media is also trying to pretend. I heard some people talking about how, investors have been driving this, retail investors. No, they're not. I know for a fact this has got nothing to do with retail investors. The retail business has been slow. It's picked up a little bit over the last few weeks, but it's still slow. And it's not just at Schiff Gold. The retail public is just getting in on this trade. Investors are finally being told by their Main Street, Wall Street firms to include gold in their portfolios. They haven't been responsible for the run-up. So gold has gone from 2,000 to 4,000 with very little private investor participation. It's all been driven by global central banks. And global central banks aren't anywhere near finished buying. They are ongoing buyers. They have so many dollars to divest, and they've got to buy gold. So now the investing public is just joining. So the upward pressure on gold is going to intensify.
Now, before anyone accuses me of hyperbole, let's be clear. I'm not saying silver's going to $200 tomorrow, but I am saying that structurally, fundamentally, it's heading there whether Wall Street likes it or not. Markets don't stay irrational forever. They can ignore reality for a long time, but eventually reality wins. And the reality is that you cannot run deficits forever. debase your currency endlessly, and expect hard assets to sit still. What we're witnessing right now is the first stage of monetary revaluation. Gold's already broken out, silver's following. The miners are lagging, but they'll catch up. The mainstream is still in denial. They're calling this a speculative rally, a temporary hedge. CNBC panels are debating whether $4,000 gold means people are overreacting. No, it means people are waking up. You know who isn't surprised? The central banks. The People's Bank of China, the Reserve Bank of India, the Turkish Central Bank. They've been buying gold hand over fist for the past 2 years. They see what's coming. They know the dollar's days as the sole reserve asset are numbered. And once gold reestablishes itself as a monetary anchor globally, silver will be dragged along for the ride. Historically, silver outperforms gold in bull markets. From 1976 to 1980, gold rose 800%. Silver rose 1,500%. From 2008 to 2011, gold doubled, silver tripled. It's the same dynamic every time. Gold moves first, silver explodes later. And when that explosion comes, it's violent. In the late 1970s, silver went from $8 to $50 in less than a year. In 2010, it went from 17 to 49 in 8 months. That's how silver moves when it wakes up. We're at that same point again. People always ask, Peter, how will I know when silver's about to take off? Easy. You'll know because the same people who've been ignoring it will suddenly start trash-talking it on TV. They'll say it's overbought, that it's just a speculative mania. That's when you hold your ground, because right before every major breakout, the skeptics get the loudest. And as for the broader market, the writing's on the wall. The Nasdaq hit a new high this week, then collapsed 3.5% in a single session. That's not a healthy bull market, that's exhaustion. When indexes make record highs and immediately reverse, it means the big players are quietly heading for the exits. Trump's tariff war is just the spark. The fuel is overvaluation, leverage, and delusion. Tech stocks are trading at price-to-earnings ratios we haven't seen since 2000. Everyone's convinced AI will solve everything, including the national debt. It won't. Meanwhile, the real economy is grinding under higher costs and stagnant wages. The Fed can't fix that with another rate cut. You can't print productivity. You can't stimulate your way out of insolvency. And yet, that's the only playbook they've got left. The White House is already pressuring the Fed to cut rates again, even though inflation's nowhere near the 2% target. If the Fed caves, and they probably will, you'll see the dollar fall and metals soar. That's why I keep telling people, stop thinking of gold and silver as investments. They're not. They're insurance. You don't buy insurance because you think your house will burn down tomorrow. You buy it because you know the fire department's been defunded and your neighbor's playing with fireworks. That's the U.S. economy right now. Over-leveraged, overheated, and one bad spark away from chaos. And Bitcoin? It's the fireworks. Bitcoin is the ultimate risk-on asset masquerading as a hedge. Every time risk appetite fades, Bitcoin gets destroyed. Look at this week. Gold and silver soaring, Bitcoin plunging. Down 5% for the week, 25% below its gold relative peak. That's not a coincidence. It's proof that Bitcoin's correlation isn't with gold. It's with the Nasdaq. If you want a safe haven, own something that doesn't need electricity or an internet connection to function. When the system's unstable, people don't want a digital token. They want something they can hold in their hand. And that's why I think we're just getting started. Gold closing above $4,000 for the week is a line in the sand. It's psychological, but it's also technical. We've broken through every resistance level the chart watchers had. There's no ceiling left until $5,000, maybe $5,500. Once we get there, you'll start hearing Wall Street analysts talking about new paradigms and hedge diversification. That's when the retail crowd joins in and the real fireworks begin. But the real sleeper trade here is silver, because silver's still cheap, laughably cheap. You can buy the same ounce of silver today for the same nominal price it sold for in 1980. That's not just undervaluation. That's generational opportunity. And when the psychology flips, when silver stops being seen as poor man's gold and starts being recognized as the most scarce industrial metal on Earth, You'll see the kind of vertical move that makes millionaires overnight. Look, I don't care if you're a gold bug, a silver stacker, or a crypto kid. If you understand supply and demand, you can see what's coming. Physical supply is dwindling. The COMEX inventories are down to multi-decade lows. Lease rates are spiking. Industrial consumption is breaking records. And for the first time in history, we've got an energy transition narrative colliding with a monetary crisis. That's never happened before. It's why I keep saying, you haven't missed it. You're early. This isn't 2011, it's 1978. The mania phase hasn't even begun. When it does, silver won't inch higher. It'll teleport. And when that happens, remember this: gold is truth, silver is justice. Because gold exposes the lies of the monetary system, but silver punishes them. It's the metal that gets revenge on debt, dilution, and deception. So don't be spooked by volatility. Don't let CNBC's talking heads convince you it's over. This isn't over. It's just beginning. When the dust settles, when gold's at $5,000, silver's at $150, and the talking heads finally admit they always knew it was coming, you'll know the truth. You'll know you were early, and you'll be holding the one thing the system can't print: real money.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.